Keon, a senior research analyst with Lipper, and I'm here to speak to you about the fund flow activity for the week ended Wednesday, May 8th. We'll start this week's report by taking a quick look at the week's market activity. All three of the major equity indexes were down for the week. The Dow Jones Industrial Average took the biggest hit with a loss of 1.75%, followed by the S&P 500 index and the NASDAQ Composite Index, which were down 1.52% and 1.32% respectively. The equity market suffered the majority of the losses all on one trading day. On Tuesday, May 7th, the U.S. announced that it would increase tariffs on $200 billion worth of Chinese goods if the trade talks did not progress by the end of the week. Well, it's now the end of the week. The trade talks did not progress, and the U.S. raised tariffs on these goods from 10% to 25%, as it appears now that the trade war is back on. Let's turn our attention back now to the fund flow activity. We'll start by taking a look at the activity for the macro groups this week. Equity mutual funds saw net outflows of $2.3 billion. Taxable bond funds took in $3.2 billion in net new money. Muni bond funds had increases of $1.3 billion, and money market funds had net inflows of $22 billion for the week. We'll take a closer look at each one of the asset groups now, starting with equity funds. As I just mentioned, equity mutual funds had net outflows last week. The $2.3 billion in net outflows was their 12th straight weekly net outflow. Once again, we see the net negative flows dominated by domestic equity funds. They had $2.1 billion leave their coffers, while non-domestic equity funds contributed $200 million to the total net outflows. Breaking it down a little bit further, down to the peer group level, we see on the domestic side, multi-cap core funds had just over $300 million leave their coffers, and global multi-cap core funds had about $140 million leave. Moving on now, we'll take a look at equity ETFs. Net outflows for this group as well last week, a pretty big one, $10.4 billion. It was their highest net outflow since way back in January. Interestingly enough, the lion's share of these net outflows were centered in just two products. The SPDR S&P 500 had $7.3 billion leave, while the Invesco QQQ had net outflows of $2.5 billion. On the flip side, the Consumer Discretionary Select Sector SPDR ETF took in just over $600 million in net new money. We'll move on now, start to look at our taxable bond group, starting with mutual funds. Net inflows for this group last week, it was their 17th straight weekly net inflow as they took in $3.2 billion in net new money. Big players last week, couple corporate investment grade classifications as core plus bond funds and core bond funds took in $1.1 billion and $759 million respectively. Taxable bond ETFs, net outflows here last week, they saw $1.4 billion leave their coffers. Major contributors to the net outflows was the iShares 20-plus year Treasury product, saw almost $900 million leave their coffers. The SPDR Bloomberg Barclays High Yield product had roughly $650 million in net outflows, while on the buy side of things was the iShares Broad USD High Yield Corporate Bond ETF, which had net inflows of just about $360 million for the week. Next group to take a look at is muni bond funds. Another group here extending their net inflow streak. They took in $1.3 billion in net new money, which was their 18th straight weekly net inflow. Once again, the majority of the net inflows coming from the national muni classifications, as we see the high yield muni and the general muni classifications had net inflows of $371 million and $344 million respectively. Our last group to take a look at is money market funds. As mentioned previously, they had the largest net inflows for the week at $22 billion. They've had kind of a bounce since over the last several weeks after their large net outflow of roughly, I believe it was $54 billion a few weeks back. The major contributors to this week's net inflows was the institutional U.S. government money market funds and the institutional money market funds peer groups, which took in $10.1 billion and $4.3 billion in net new money respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.